What's up everybody, my name is Ben Beeman and welcome back to another video. Now I'm sure over the past 6 months you've heard something about the decline in the price of real estate, and that's what we're going to be talking about in today's video. Over the past couple of years, the prices of real estate have completely skyrocketed, and in mid-2020 the median price of a home in the US was around $322,000 compared to mid-2022 where the median price of a home was around $454,000. This insane increase in the price of homes is making it a lot harder for people to find a home that they're able to actually afford. Now, this increase was partially because of the low interest rates which were occurring at the time, and now we are starting to see the prices of real estate come down in the US. Now, in this video, we are going to be breaking down why the real estate market is currently declining, how much longer it will likely decline for, and how to take advantage of this opportunity. If you do enjoy this video, I would really appreciate it if you would leave a like on the video and subscribe to the channel to see a little bit more of my content. It's completely free and it means a ton to me. One of the main reasons why the real estate market is currently on fire is due to interest rates. Now, interest rates are being raised due to heavy inflation that we have experienced this year, which was near the double digits. Inflation is measured through the Consumer Price Index. Now, the Consumer Price Index tracks the price of goods over time, and it tracks things like bread and gasoline to see how much they increased or decreased in price over a certain time period, generally speaking a year. This inflation was mainly due to government spending during the COVID crisis. Now, this included things like COVID vaccines, stimulus checks, and many other spending that the government was doing during this time period. An interesting fact is that the United States has actually accumulated over $31 trillion in national debt. Now, interest payments on this debt is actually one of the largest expenditures that the United States has each year. Considering the fact that government spending plays a major role in inflation, the fact that this debt is continuing to increase drastically does not make the US economy look good in the long term. Now, obviously, there are many solutions to this debt, so it just means something is going to have to change in the future. However, if you are interested in the national debt, I will link the national debt clock in the description of this video. As I stated previously, this inflation has caused the Federal Reserve to raise their interest rates. This has caused interest rates on a 30-year fixed mortgage to go from around 3 to around 7%. Now, this may seem small, but a 7% rate with interest on a $500,000 house accumulates to you paying around $958,000 over a 30-year period. Now, a 3% rate on the same house of $500,000 over 30 years would accumulate to around $607,000. So you can see why this is such a major issue. Now, due to this major issue of interest rates rising and inflation, we are seeing a little bit of less demand in the housing market. Now, between June and September of this year, home prices fell about 2.2% in the United States. Now, Morgan Stanley predicts around a 10% decline in housing costs between June of 2022 and 2024. However, analyst predictions are all over the place with how much of a decline we could actually see. This meaning that nobody really knows how much the housing market will actually fall before it begins to recover. However, in history, we have seen that the housing market generally declines about 5% for each year that we were in a recession, and it's questionable if we are actually in a recession right now, but it is likely that if we are not in a recession now, we will be within the next few months. We have also seen a big decline in the stock market this year, so it is safe to say that we will likely continue to see housing prices decline until the economy gets a little bit better. Now, with that being said, considering the fact that rising interest rates are causing this decline in the housing market, once the Federal Reserve does begin to tame inflation, which honestly could take well into 2023, interest rates will likely begin to decrease or at least stop increasing for a period of time. Now, my estimate that when the Federal Reserve does stop raising these interest rates, that this will likely halt the decline in the price of housing or at least slow it down a bit. This is considering the fact that the Federal Reserve would only do this if the Consumer Price Index cooled off a lot more. Now, this is only a personal prediction, but I really think that in mid-2023, the Fed will stop raising the interest rates. Now, this leads me to the fact that coming soon, it may be the best opportunity of your whole life to buy a house or to invest in real estate. This is because the housing market only really declines or even crashes every decade or so. So once we return to a period of growth, it will likely likely to stay growing for a long time. My mom used to say to me that real estate is a good investment because we're not making any more land on this planet. Now, this is basically meaning that there will always be a need for houses, and considering the fact that the U.S. population is continuing to grow, we will likely see the housing market grow over time as well. Now, this is particularly a good time for cash buyers, considering the fact that you will not have to pay as much interest on a loan if you put more cash down up front. Even if you don't have that much cash on hand, it may still be a good time to consider buying a house or buying an investment property when prices are low, considering the fact that once interest rates go back down, you can refinance your loan on your house and get a much better rate. I will say, if you are still moving around a lot, I would consider looking at other investments other than real estate, and this is because closing costs and other fees can be very expensive. And I personally would not consider real estate to be a short-term investment, considering the fact that the more you buy and sell, the more you will have to pay these fees. With that being said though, real estate is a wonderful way to make passive income. Now, passive income is money that you make while doing no work. In renting out properties, you can easily collect this passive income from rent checks. In addition to the rent checks, your property will also likely appreciate in value over time, so it's almost like a 2-for-1 deal on your investment. Now, if you do already own real estate during these times, I would not necessarily say that it's time to sell. Historically, we have seen this many times in the past where real estate tends to decline for a little bit and then go back up, and so we have always recovered from this in the past, and so who's to say that this time is going to be any different? If I personally owned real estate right now, I would just stick it out and even consider buying more in 2023. Now, if you do enjoy this video and hearing about real estate, please do let me know in the comments. Now, I hope this video did not sound too grim on the outlook for real estate. I really am optimistic in it long term, and I personally think of every situation as an opportunity to grow in one way or another. I hope that I was able to also show you some potential of investments or opportunities that you can consider in the future. And if you do have any more questions, please do not hesitate to reach out to me in the comments or through my Instagram or anything else. Now, I do hope you guys have a wonderful rest of your day, and I hope to see you guys in the next video.